My name is Andrew Stotts, and I want to welcome you to the Global Equity Valuation Competition. It's heating up. Next is Surya, who's going to be presenting on Micron Technology. Let me get him in here. Surya, good to see you.
Thank you, Andrew, for this opportunity.
Yeah. Micron, I'm interested. It's going to be a interesting one to catch up on. I've got the presentation now up on the screen, and so you've got 6 minutes to present, and then we'll have 4 minutes of Q&A. So you ready to go?
Yeah, I am.
I'm going to exit now so you can start now.
Okay. AI is no longer a compute constraint, it is memory constraint. And Micron is one of the few companies positioned to solve that bottleneck. Hi, my name is Surya. My call for today is Micron with a buy recommendation based on a target price of US dollar 656, implying an upside of 27%. I derive my target price based on DCF based valuation with a WACC of 12.4% and terminal growth rate of 5%. My valuation is based on three key highlights. Number one, AI factories build out creates a demand for memory and storage chips. Second, Micron solves capacity bottleneck by offering LPD RAM and SVM. Third, Micron is moving into platform enabling partner, which drives higher average selling price. There are some risks. Number one, failing at differentiation kills modes. Second, high execution risks due to complexity. Third, high capex intensity. Micron designs and manufactures memory and storage chips and was established in 1978. The product portfolio includes DRAM, NAND, and NOR. Micron is the third largest player in the industry with 26% market share. The USA is the main market of the company with revenue 65%. Taiwan represents 15%, China 7%, and other Asia Pacific 5%. Micron's latest innovation, SOCAM 2, for data center infrastructure is the world's first high capacity LPD RAM, which is 256. This consumes 50% less power and delivers uh, double capacity and 2.3 times faster first time to first token. The global semiconductor market is expected to reach US dollar 975 billion in annual sales by 2026 and US 2 trillion by 2036 as per Deloitte. Statista forecast that global memory semiconductor revenue will hit US dollar 295 billion in 2026. My valuation is based on three key growth drivers. Number one, AI factories build out would create a demand for memory and storage chips. According to Gartner, global AI spending will hit US dollar 2.52 trillion in 2026 and US dollar 3.34 trillion in 2027. AI infrastructure build out alone will drive 49% increase in AI spending in 2026. High performance DRAM and high bandwidth memory are key in AI infrastructure, and Micron is one of the leading suppliers with 26% market share. Three major companies, including Micron, captures over 90% of the market share for memory and storage chips and control global prices. Second growth driver, Micron solves the capacity bottleneck by offering LPD RAM and HBM. Rising AI workloads require larger context windows and memory pools to run LLMs. But memory capacity has been a significant bottleneck. Micron started supplying 256 LPD RAM modules from Q1 2026, enabling CPU attached memory to expand up to 2 terabyte per server, applicable across data centers, smartphones, and PCs. This consumes less power but doubles the performance. The unified architecture of LPD RAM and HBM addresses the capacity constraint, and Micron can set premium pricing. Third growth driver, Micron entered into the strategic partnership with NVIDIA and started volume shipment of SVM4 in Q1 2026, specifically designed for NVIDIA's Vera Rubin platform. HBM4 delivers over 2.8 terabyte bandwidth per server, which is 2.3 times faster and allows higher density stacking by 33%. The revenue breakdown of the company, CMBU represents 36%, MCBU 32%, CDBU 19, and AEBU 13%. Now let us discuss about the revenue, quarterly revenue of the company. The total revenue of the company in second quarter 2026 is over 23 billion, which is 196% growth year over year. Operating margin is 68%, which was 45% in the previous quarter. Price to earning is 22 times. Return on invested capital is 18%. Sharp jump in the top line in Q2 2026 is due to strong AI driven demand. The massive expansion in gross margin in Q1 and Q2 is due to pricing power controlling supply over demand. Operating margin improved due to strong SG&A and R&D expense. P remains stable in the last 3 quarters, and this indicates that stock price has been rising in line with expected growth of the business. So there are some risks to the business. Number one, failing at differentiation kills moat. This is the first challenge to the business. Similarly, high execution risks in scaling advanced memory technology. The second risk, and high capex intensity would drag down the free cash flow of the business. These are the major risks of the company. So considering all the growth factors and analyzing the risk factors of the companies, my valuation with target price of $656 seems achievable, and I recommend a buy. Thank you.
Excellent. So can you go back to that table of the quarterly numbers? Yeah. What I'm interested in, the obviously second quarter was incredible, but if we
Right.
look at first quarter and prior, I see a strong operating margin, but a very low return on invested capital. Are they like just accumulating cash, or what is it that's depressing that return on invested capital?
This is basically due to the free cash flow and due to the increased demand of this AI infrastructure build out. And on that, the company was able to gain higher margin due to supply constraint, and because of that reason the return on invested capital is really high in the second quarter.
And as far as free cash flow is concerned, what's the risk? You know, I mean, when you look at all of these companies, there's a risk that the capex will just consume, right, the free cash flow, or let's say the strong EBIT. Where is this company in the capex cycle, and how easily can they manage that?
The capex, the company, if we see here in the R&D and SG&A cycle, the company has has reduced its SG&A and R&D expense, but at the same time the capex has we can see here slightly, no, that means it is increased heavily,
Mm.
but this increase in capex is to meet the revenue growth. If we see here, the revenue growth has increased by almost 200%. So it is manageable in terms of capex. It doesn't hurt the invested capital of the company.
Okay, let's go back to the first page. The other question I have is that the stock price has gone up a lot. The margin is super high, so it's hard to see that margin is going to expand much from here. Is this just a revenue growth story because of pricing and you know, strong volume, or how would you describe the story from that perspective?
Yeah, actually, in the past time, the semiconductor market has to be something like cyclical, but now I see, because of this infrastructure development, AI infrastructure development, the memory is one of the key component, and it is bottleneck, and because of that the company has uh, uh, positioned one of the key player in the industry and control the supply, and they managed to gain higher margin, and the only three companies control the 90% of the memory market. So I don't think this will be any problem very soon.
And your free cash flow valuation looks attractive, and your discount rate is, very reasonable. It's not like you've got a low discount rate. From a free cash flow perspective, company looks interesting. Is there anything, let's say you're being actually a little bit maybe conservative in your weighted average cost of capital, or in, what is your feeling about, is that free cash flow valuation the maximum, or do you think that there's more room for it to go up?
Yeah, in terms of weighted average cost of capital, yeah, I agree with you. I have assumed 12.4, or seems a little bit higher, but the semiconductor market is a kind of in high peak, in the high momentum currently, and to mitigate that risk, I use this higher WACC of 12.4%.
Okay. And the reduction in power that you talked about for one of their chips, is that a common thing that's happening at all of these guys, or is that something special that they've developed?
No, this is not 100% own of the Micron only. That means other guys, other two players are also working on that. But Micron is the pioneer on this, and definitely Micron can get more benefit from it.
All right. So how does it feel to complete this part of the Global Equity Valuation Competition?
Yeah, I feel more confident now, and I feel like valuing company is something I can do it now in better way. That kind of feeling I have now.
Yeah, it's great watching, your progress. And seriously, that was, think about when you started in the Valuation Masterclass Bootcamp to today. That's impressive. So exciting.
Yeah, thank you, Andrew. Thank you for this opportunity as well.
Yeah. And we'll see how things go. We got tough judges, and they're in there watching every one of these, and the competition is challenging, but well done.
Yeah, thank you, Andrew. Thank you
All
very
right.
much.
Yep. We'll
Bye,
talk
bye,
soon. See you.
bye.
Another great presentation. Surya presenting on Micron Technology. Interesting on the free cash flow valuation, looked attractive. So you've been watching the Global Equity Valuation Competition sponsored by Valuation Masterclass and Koifin, that's a tool partner providing tools to the students and the participants. My name is Andrew Stotz, and I'll see you